Welcome to the Wall Street channel. Don't forget to subscribe and like this video if you like it. Is the market in an up or downtrend? Will prices most likely go up or down from here? Indeed, is there anything that might help us understand what is in store for future price activity? These are the big questions that speculators have failed to answer since trading began. Thus we begin your first lesson in understanding trend analysis in the marketplace. The basic principle is that as prices move from a low to a high, there is a shift from where the close is in each day's range. Remember, it makes no difference whether we are using 5-minute, hourly, or weekly charts. The same rule applies. As a market low is made, the close of the day, or time period, is right at or very close to the low of that day's range. Then seemingly from out of nowhere, a rally begins, and as this rally unfolds, there is a marked relationship change. The change is that the further along this uptrend matures, the higher the close will be on the daily bars. Figure presents a stylized view of this relationship change. Markets bottom with price closing on the low of the daily range, while they top out when closes are at or near the high of the daily range. 1. Almost all market highs can be found to occur at or shortly after a market closes right on the high of the day. 2. Almost all market lows can be found at or shortly after a market closes right on the low of the day. Watch the continuation in the next video. Thanks for watching. Subscribe to my channel and don't forget to put a bell in order not to miss the release of new videos.